When it comes to the economy, the mood today is curiously optimistic, given that we still don't really know if ships can or cannot get through the Strait of Hormuz. The news about the apparent opening led to big gains in stock markets and big declines in the price of oil today. Gas prices have also ticked down in the last few days. Of course, Trump bragged about those oil price declines in his speech tonight, but right now the world is waiting and holding their breath to see what actually happens in Iran in the days to come. That includes the shippers who rely on the strait. So far, most of them are holding back, actually sending any vessels through. The nightcap is still here, and let's keep the conversation going. So, Ron, it's not clear that ships can get through the Strait of Hormuz or that, in fact, companies want to send their vessels through. We still have this oddly buoyant, almost euphoric stock market. So I'm going to ask you again what I always ask you, which is why? Like, why does there seem to be this disconnect between financial market optimism and the real on-the-ground conditions?
Yeah, and so to put that in perspective, the stock market is at least the S&P, a new all-time high. We saw that 13-day run for the NASDAQ, as you said, longest since 1992. Consumer sentiment is at the lowest reading on record, going back to 1957. So the gap between Main Street and Wall Street has never been wider, certainly in our lifetimes. And I think there's a couple things happening here. I mean, I talked earlier today with Nicole Wallace about it. I think you kind of have to break out certain pieces of behavior in the financial markets separately. So when you get a positive headline, there are algorithms that read keywords. And so once it's positive, you get buy programs that hit that are really largely computer driven. Then you get this belief, as the president keeps insisting, that the war is going to end possibly this weekend. So there's more buying. Oil prices collapse, interest rates come down. That's a catalyst to buy more stocks because the notion that inflation might stop going up opens the door for the Federal Reserve to lower interest rates somewhere down the road. So you get this cascading effect where you add all these things up. Positive for stocks, negative for oil, and that's the day that you get. And it happens in size because things don't happen, incrementally at this point. They happen in, really big trades. And in fact, we saw, from what I've seen so far today, a huge trade in the oil market just before the news came out, betting that oil prices would go down, went down about $10 a barrel to 83
What a
bucks.
coinky-dink.
Another coinky-dink in the markets. And, even at $83, we're still about $30 above where we were earlier in the year. So, yes, gasoline prices will come down. That may help consumer sentiment to a certain extent, but they're not going to go back to where they were in January.
Yeah, well, I wonder if part of what we see, Philip, is that there's sort of like a FOMO almost. I mean, you talked about algorithmic trading, that maybe it's just the computers, that the bots.
In part. Sure.
In part. But I do wonder if it's that markets have sort of been conditioned to buy the dip. They don't want to be missing out on the rally. And so there's like this desire for more optimism almost. There's this desire for more euphoria in the markets. And I wonder how sustainable that is.
No, I mean, I think that's the fundamental question, right? I think you're exactly right that we've seen the pattern so often of Donald Trump doing things and then the worst effects of it not being as bad as it could have been.
Right.
And people being like, OK, and then moving forward from there, right? We've seen this pattern over and over again. The question is what happens if that pendulum shifts, right? What happens if that seesaw tips the other direction? And that is the FOMO heads the other direction and you want to get out before everyone else gets out, right? And then that's a huge problem. The question I would ask Ron is, like, who's right? Right? Who's right, Wall Street or Main Street? I mean, it seems hard to believe Wall Street could possibly be right here. But who's right?
In a strange way, they can both be right. Okay, so if you sold at Liberation Day last year and the market tanked in a matter of days, we're substantially higher than we were a year ago. If you sold in the Great Financial Crisis, we're infinitely higher than we were. When you sold it in the day of my birth in 1961, the Dow was at 665, and we're at 49,000. So in a longer-term perspective, if you're not trading the market, this is not, none of these things, even World War II wasn't something to worry about. We traded higher throughout almost the entire war, right? But at the end of the day, if this problem persists, there will be real economic effects affecting middle income and lower income people disproportionately because energy prices will stay higher. Food prices will stay higher. The cost of living will not come down. And that's going to be problematic for Main Street. Wall Street will do what it's going to do and has done over time. It's returned 10% a year every year since 1926.
I mean, I will point out that stocks look very expensive right now. If you look at the stock values relative to the underlying earnings, they're like way out of whack. They haven't been this out of whack since the dot-com bubble in 2000.
A lot of that's been corrected, though. If you look at technology stocks, the valuations have come down to I'm going to get in the weeds here for a second, 19 times next year's earnings, which is well below where they were prior to the war. And so you could argue that there have been literally bargains made during this period. Actually, alternative asset managers down 40%. Software companies were down 27 or 30%. So they've had their bear market.
Okay.
Right.
Okay. Fair enough. Fair enough.
Yeah.
So, David, I want to talk a little bit about some of the collateral damage of the war so far economically. You have places in Europe, in Canada, worried about running out of jet fuel, canceling flights. I believe that the IEA said that Europe was going to run out of jet fuel at the current pace anyway in 6 weeks. And I'm wondering what all of this collateral damage does to our relationships with our allies, which have been strained, obviously, for other reasons.
So there was a meeting today in Europe, and the Prime Minister of Great Britain and the President of France talked with 58 other countries, all of whom are eager to send their ships, their Navy ships, to escort these tankers out of the Strait, out of the Persian Gulf, which is exactly what you want, again, to get this oil out of there. And when Keir Starmer called Donald Trump, he mocked them. And he said, we don't need your help. NATO is useless. And it was sort of astonishing because there is damage around the world, more, even arguably more so than the United States. These include countries from Asia. This is a very dangerous time for South Korea and Japan as well. So instead of mustering a big international force of ships to bring all these tankers out and bring down global oil prices, it's wild claims and insults. So it's just back to the question about this basic policy making and the long-term strategy here versus the daily win. And it's come back to haunt the president, just this negative approach toward Europe. They want to stay away from him because he's so unpopular with their own voters.
Yeah.
Can I just raise a point here, which I think sort of is under-recognized, and I, as a layperson, sort of under-recognized it. These ships are super, super slow, right? And so the effects of the strait being closed are rippling out incredibly slowly across the world, which I did not understand. This is not something I pay close attention to. And so, it's been 49 days, and the ships are still sailing now, which I think left 49 days ago, right? And so this is going to have ramifications over the long term regardless. Even if the strait opens tomorrow and all the tankers come through, those tankers
move. There's a lag.
There's a big lag, and the lag hasn't even shown up yet.
Japan gets 90% of its energy from imports, right? And China gets 50%. The helium that's used in making semiconductors comes through the Strait of Hormuz. Right. And so all of these areas can be hit really hard over the course of the next several months. So there is a long tail to what appears to be a relatively, so far, short war.
Right.
But the effects will be felt for months beyond today.
It's hard to believe that, however this shakes out, like you're saying, it's so far a short war. If there's ever a conclusion to this, we've kind of shown Iran how they can maintain influence basically forever.
Yeah.
This was always an option for them, shutting down the strait, just making it impossible for people to come in, just blast off a few rockets, set some fires. Now they've seen it. Now they've got the blueprint. They see, oh my goodness, we can be influential forever. This is our strait. We're always going to be here. This is our land. And so I don't know how you can ever really make a deal with that regime that guarantees there will be peaceful passage through this strait, and because of that, I don't know if the volatility that we're feeling right now ever truly settles to where it was before.
Yeah, and this is part of the reason I was asking before about enforcement mechanisms and enforcement mechanisms not only on nuclear enrichment but also on keeping the strait open, and we have to live with the consequences, but so do our Gulf ally friends.